Hello, today we're going to talk about writing off travel, a very exciting write-off. My favorite write-off actually between that and meals and entertainment, but meals and entertainment are a write-off while you're traveling, which is very exciting. So this is kind of like the combo of them. If you're not familiar with me, my name is Jamie. I'm a CPA based in Toronto, Canada. I'm the founder of Chill Books. Chill Books is a super fun, approachable financial education course for entrepreneurs that teaches them how to use QuickBooks, how to do their bookkeeping, and all of the essential financial education they need to manage their finances and grow their business. So let's get right into it. Today, we're going to talk about how to know if you can write off a trip for through your business. Here, we're going to talk about documentation, what documentation you need to make sure that you're not going to get in trouble in an audit. We're talking about one common thing that I see people writing off with their business trips that they cannot write off. Also, we're going to talk about business travel that you're billing back to your clients. So what to do with that when you're traveling for work and then you end up billing that travel back to your client. What does that look like when it comes to writing off and bookkeeping and all of that jazz? So first things first, how to know if you can write off business travel. So it all boils down to one key thing. You need to be able to prove that the primary purpose of your trip is for business. Primary purpose. So let me give you an example from a recent trip I was on. So I went to Kelowna for a business retreat, and the retreat was planned a while in advance. I knew the dates we were going, and it was with a group that I was masterminding with and a mentor. And so we had the dates planned of the retreat, and then I decided to go to my sister and say, I'm gonna be in BC for these few days. Should we hang out and add a weekend, after my retreat or before my retreat? And should we make a little vacation out of it? But the key thing here is that I was going either way on this trip. This trip was for business. Whether or not my sister and I decide to make a weekend out of it or, a vacation out of it, the truth is that I was already going for business. The primary purpose was business. And it was reasonable to assume that I would, fly across the country for this because it's a business development expense. It's I'm working with my mentor, I'm working with a group of other entrepreneurs, and we're working on strategic pieces of our business. The primary purpose was that business retreat, and I might have tacked on a few days before or a few days after, but I was going to Kelowna for business. Now, on the flip side, let's pretend like I decided that I wanted to go to Kelowna for fun. And so I reached out to my sister. I'm like, let's plan a trip to Kelowna. We'll do some wine tasting. We'll hang out, do some paddle boarding on the lake, all that jazz. And then I was like, well, actually, my mentor is in BC, in Kelowna. And I decided to reach out to her and see if she wanted to meet me for a coffee or meet me for a dinner while I was there. Then would I be able to write off my travel expenses for my Kelowna trip? No. Because the primary purpose of that trip with my sister was to go out and have fun. It just so happened that I was going to meet up with my mentor while I was there, but would I be able to justify to the CRA the purpose of this entire trip being for that one meeting? Likely not. And that's when it comes down to write-offs with the CRA, is you want to make sure that whatever you're writing off, whether it be travel or other expenses, is that it's reasonable to assume that you would spend that money for that purpose and that you're going to end up making money because of that write-off, if that makes sense. So I have a free guide. It's called the Solopreneur Write-Off Guide. If you want to get more into write-offs and what you can claim for your business, you can access that at the link in my bio. And so anyways, the point is you want to be able to justify it to the CRA. And likely I would not be able to justify a whole weekend in Kelowna with meals, flights, hotel, and everything just for like one meeting with my mentor that just because, they were there. It wasn't even something that we had planned in advance or anything like that. So that's what you want to think about, is really like the primary purpose of the trip. And sometimes there can be trips that are so clearly combine business and personal. And so in this example, with if my sister ended up coming with me, she did not, sadly, but if she did end up coming with me on the business retreat trip, then I would be claiming part of the expenses under my business, and part of the expenses would be just my personal expenses. And what that would look like is the flights I would be able to claim through my business, because I was going to fly to Kelowna either way, regardless of whether we tacked on that fun portion of the trip. I would be able to claim my accommodations, my hotels, for my hotel costs for the time that I was there for business. So say the retreat was Tuesday to Thursday, and then I was there Friday to Sunday with my sister, then I would only be able to claim my hotel from Tuesday to Thursday, because then it would be reasonable to assume that I would have flown out on Thursday or Friday, if it was just a purely business trip. So whatever I added on to the trip because of that fun portion of it is what I would not claim. My meals while I was there for business. So for the days that I was there for business, I could claim my meals, and things like hotel internet. That's something that people miss out on too. Like if you're paying for internet while you're there, or on the flight to work on the flight, those types of things. And there's something that just came to my mind that I wanted to note. Oh yeah, with the meals, depending on your business structure and the trip, sometimes they're only 50% claimable. So just keep that in mind. You can claim your meals and entertainment when you're traveling, but sometimes they're only at 50%. Sometimes there are gray areas. Actually, oftentimes there are gray areas. So on this trip, I did not tack on that personal portion. I did not end up spending the weekend in Kelowna with my sister. And so I had the retreat, I think it was Tuesday to Thursday. And then I ended up staying till Friday and spending a night in Kelowna on my own. I switched up the accommodations, went out for dinner, did a little sightseeing. And in that case, I actually claimed that extra day because it was only one extra day. Okay. And because the retreat ended in the evening on the Thursday night, and either I could rush to try and fly out Thursday night, or I could fly out on Friday and not have to stress about catching a flight just in case things went over time and whatnot. So to me, that was something that I deemed to be reasonable, flying out the next day after the retreat ended. So I ended up claiming that extra night in Kelowna, and I ended up claiming the meals that I incurred while I was traveling, and then I flew out the next day, which is really funny because I ended up meeting a fellow accountant while I was in Kelowna. I ended up staying at a B&B, and the couple that ran the B&B, one of them was a firm owner in Kelowna. So I'm going to say that it ended up being business either way, which is really funny. But yeah, so coming back to the original point is you want to be able to prove that the primary purpose of your trip is business, and that can be through itineraries, like showing what you did when you're going out on having business meals while you're traveling, documenting who you were meeting up with and what you were working on. If it's not so like cut and dry, like a retreat, say you were traveling to another city because you want to look into maybe opening up another location there, then you would want to know what realtor are you meeting with? What places are you going to see? Like this stuff can feel like overkill, but when it comes to travel and meals and entertainment in general, you want to over document, just because CRA knows those are the areas that we kind of like to play with a little bit. So, and if you're not sure, then document as much as you can in your bookkeeping system. And then at the end of the year, you review your travel expenses with your accountant to see what they deem is reasonable based on your type of business and based on your numbers. So that's when having that bookkeeping system really can have your back, because you'll be able to look at everything from a bird's eye view with your accountant in like a super organized way as well. So next, what do you need to document? So I talked a little bit about documenting what you were doing on the trip. So I was at the business retreat. It's pretty clear. I have an invoice saying paying for the retreat. But if it's not something so cut and dry, if it's meeting with clients, you want to make sure that you're documenting like what clients you're meeting with and what you guys are working on. And the documentation should live in your bookkeeping system. that's where you're going to have all of the expenses, all of the actual receipts for the things that you purchased. And so the things that you can claim are things like transportation, so your airfare, your train, Ubers to and from the airport, those types of things. Pro tip, sign up for Uber Business. It's free and you can attach your business credit card and toggle between business trips and personal trips. It's really cool. And you can put the purpose of each Uber in the app itself when you order the Uber so that it shows up on your receipt and goes right into your bookkeeping system, which is really cool. And yeah, and so you can, claim your accommodations, your Airbnb, your hotels, your tips. That's one that comes up a lot, is like sometimes you're like giving out cash tips. Maybe you're leaving some cash in the hotel room for the housekeeping staff, or you're tipping somebody to help take your baggage up to your room for you. Those types of things are hard because they're cash based and you don't get a receipt for them. And this is going to sound super cheesy, but this is what you do: is you keep a log of the tips that you gave out, and then you can claim those tips on your, like, through your business. So that's something to keep in mind as well. And then another one is, what else did I want to talk about? Your meals, of course. So meals and entertainment, this is something I see people get into a little bit of trouble with, is maybe they're dining at their hotel and they charge the meal to the room, and then it just shows up on their room receipt at the end as like one line, like the name of the restaurant and the total amount paid. You want to make sure you're getting the itemized receipt for your meals while you're traveling. That is important. So when you're, at that hotel restaurant, dropping in your room number and charging it to the room, you want to keep that receipt that shows what you ordered. And that's the receipt that you would also write, the purpose of the meal, if you're meeting with a client or whatever. And that's going to be your backup for the meal receipt. One line on your hotel bill is not going to jive in an audit. So you want to make sure you get that actual receipt. And the next is, I want to talk about what you cannot claim, that I see people making a mistake with all the time, is, right before they go on a trip, they're like, okay, I gotta go to the bank and take out some foreign currency. So I'm going to buy some US dollars, for example, and then they'll take that receipt for the US dollars that they purchased and they'll put that into their bookkeeping system. And I know this seems like you're like, well, yeah, I bought that cash for the purpose of this business retreat, but you're not going to be able to claim that as an expense. You're going to claim the things that you purchased with that cash. So say I took out 50 US dollars and then I went and had breakfast when I landed on my trip, and that breakfast cost 25 US dollars. Then I want to get the receipt for the breakfast, that 25 US dollars. And that's what I'm going to put into my bookkeeping system and claim as my expense. So just to be clear, that receipt for purchasing foreign currency is not going to count as your write-off. What it will do is tell you what your currency exchange rate is. So if you want to be super on the ball with the right exchange rate on those things that you purchased in US dollars, then it'll help you there. But that itself is not going to count as your receipt for an expense. And yeah, lastly, I want to talk about billing travel back to your clients. Some of us have clients that are overseas or in a different city, and sometimes we need to go in for meetings and they pay for us to go into those meetings. So we might be putting our flights and our hotels on our own credit card and paying for it, and then we're going to get them to reimburse those costs. So in the end, we're not really paying for the travel. We're just kind of paying for it upfront and getting paid back for it. So with this, you need to record two different things. You need to record the income that you're getting from the client when you're billing the travel to them. And you need to record the expense that you paid for the travel when you paid for it upfront. And in the end, in your finances, in your bookkeeping, they're going to net to zero. So let's say I booked a flight for $150 and then I billed that flight of $150 right back to my client. In my bookkeeping system, I should see an expense for $150 for the flight And then when I bill the client, I should see revenue or sales for $150. That is the correct way and the most accurate way to report these things, is showing the money coming in and showing the money going out. Even though they net to zero, it's still going to raise flags if you have, if you have your client depositing $150 into your account and you don't have that kept as records in your bookkeeping system. It's going to look like you're like hiding income. So you want to make sure that you're actually recording those as sales and recording the matching expenses. And my number one tip for doing this is using QuickBooks, because QuickBooks has a function where you can mark certain expenses as billable back to your client. It's really great. So when you put that $150 airfare expense or receipt into the system, you can check a little box that says billable expense so that the system knows that was an expense, but it's actually going to get billed back, and you can select which client you're going to bill it back to. And then when you go to create billing for that client, it'll automatically prompt you to add that $150 onto the billing. So it's super clean. You're going to make sure you're billing the right amounts for travel back, and that way you can actually like just add it onto your normal billing cycle instead of doing separate bills. I want to leave you with this. If you're ever unclear of what you can claim and what you can't claim, first step, download my free solopreneur write-off guide. That way you can get a good feel of what all the common write-offs are for entrepreneurs and how to make sure that you're claiming all of them. Second, your accountant will want to see the full picture of what's going on in your business and what the travel expenses look like before they can advise you on those gray areas. So just make sure you're documenting and tracking everything, and then you'll get the most out of your write-offs at the end of the year. I hope this video was helpful for you, and I will see you later.